third speaker is Mark Lamb, CEO at Coinfloor.
So we're a Bitcoin exchange, launching soon. We've been operating full-time on this since April. We started working on it in December. And give you a little bit about my background. My background is in startups, project management of technology development, and founding several startups in the past. I went to Holt International Business School, and now I'm working on Coinfloor Limited. So the first generation of Bitcoin startups, for the most part, didn't care about AML. It was too early of a project to demand regulation, and no one was really thinking about regulation. Mt. Gox, Bitcoinica, Bitfloor, Intersango, InstaWallet, GLBSE, and blockchain.info, although they've changed their icon for copyright reasons. So Bitcoinica collapsed. Mt. Gox is looking like it's in the beginnings of the collapse. Bitfloor got their bank account shut down. Bitcoinica actually collapsed because of a heist. At least 20,000 Bitcoin were missing. I think it might have totaled around to 30,000 Bitcoin. So quite a sizable chunk of money was stolen. Intersango had a similar case. InstaWallet had all of the Bitcoin they had stolen. I don't know how much it was at that point. But what these startups represent are basically the beginning of Bitcoin, when Bitcoin was, in essence, very different from what it is today. It was either a tenth or 100th of the market size, depending on which startups you're counting. And really, what it was an open source project. It wasn't a cryptocurrency with a $1 billion market cap. And so this is partially why we've seen banks and governments have such paranoia and fear and concern over money laundering, is because most of these startups, when they first started operating, weren't thinking about AML or KYC. These guys didn't have background in finance, and so they didn't need to do that. These were people who, with the MVP version of technology. So what we're trying to do is launch a compliant anti-money laundering exchange in the UK for British pound to Bitcoin and possibly other cryptocurrencies in the future. We've been working with the regulators. We were at the number 10 meeting earlier in the month. We've been communicating extensively with the FCA, and we're here for Bitcoin users in the UK. What is Bitcoin? Well, we think it's money. It's a virtual currency created by a decentralized network. Loads of people in the UK use it. One of the reasons why I think Bitcoin is going to be so huge in the UK is because of, one, the faster payments network will allow people to buy and sell Bitcoin very, very rapidly. Two, the high concentration of online businesses. And three is the most 90% of EU transactions and finance companies are based in London. And so the UK, and London specifically, has a very unique opportunity right now to capture the global Bitcoin market. But here's where we get into regulation. What is money? Is Bitcoin money? As I said, we think it is. It's treated by its users as a currency, and it follows all the kind of Socratic definition and Aristotelian definitions of money. PSR regulations say that is money, and what the FCA has told us so far, because we have gotten, I wouldn't call it an answer, but we have gotten a non-answer from them, is that Bitcoin, for all practical purposes today, is not money, nor is it money's worth. That being said, it would still be advised for us and any financial company that's dealing with Bitcoin to register with the HMRC for anti-money laundering, which is a relatively easy thing to do. Complying with AML is much harder to do, and so if you are looking to interface between pounds and Bitcoin in some way or another, prepare for a lot of work on compliance. The technology for an exchange is quite extensive, and we've actually been working on the technology for a lot longer than we've been working on the exchange. So well before we started this in December, we've been working on the technology. But the compliance, whatever you estimate that you're going to spend in terms of time on building the technology for an exchange, estimate that you'll spend 5 to 10 times more of that time on compliance, regulation, and banking. So I wouldn't recommend doing an exchange. But I'm biased, right? I should be saying that. Actually, but going back to that point, I wouldn't recommend doing an exchange. But what I would recommend, there are a whole host of things which you touched on and a few other people have touched on that are, for what we understand, perfectly legal. Selling bitcoins, as Parsons has said, and as someone in the front has said, selling bitcoins, having a company that sells bitcoins, there shouldn't be legal difficulties around that. Having a company which accepts Bitcoin as a form of payment, as far as we know, is 100% okay. And in regards to tax and VAT, I believe that actually in Germany it is not taxed in term as a good. So you're not going to be paying 20% of the cost of Bitcoin, of each Bitcoin to the exchange, which wouldn't make sense anyway. And so it's not taxed as a good. In terms of capital gains tax, what they have said, I believe, is that after 1 year it is untaxed. So there are a lot of things: merchant services, brokerage services, peer-to-peer cryptocurrency exchanges. If you want to do a Litecoin to Bitcoin exchange or a cryptocurrency exchange, I don't think the FCA or anyone really would have a problem with that. The HMRC might want you to be registered with them, of course. But these are just some stats on the UK, and I don't know how many of you guys know the size of the market here. It's currently estimated that 69% of UK residents have heard of Bitcoin, 32% trust it. I don't know if that's accurate, but that was from TechCrunch. So biased audience? Yeah, okay. Estimated UK market for Bitcoin trade is 192 million pounds. And globally, trade, I think, is between 100 to 200 million pounds per month in terms of Bitcoin to fiat. And there's a huge amount of demand. And probably in the next year, I think 2014 will probably be the biggest year for Bitcoin, maybe in its history. I think it'll probably be the most significant. We do believe that in coming months and 2014, probably there will be a lot more government and regulatory action, and I think you'll see some things start to change. Can get into that a little bit more later. But yeah, so crowdfunding, any type of fintech, I mean, this is a fintech meetup, so any type of fintech has had a problem getting a bank account, has had problems dealing with UK banks. Crowdfunding, most crowdfunding companies weren't able to get bank accounts at the beginning. Now it's getting regulated. Now they're getting bank accounts. Now they're fine. But the thing is, and very similar for gambling a while ago, gambling companies, good luck. Nowadays, it's regulated in the UK. You can get a bank account. It'll be difficult, but you can do it. So we're in the very, very early stages of this thing. Right now, very difficult to get a bank account. Very difficult to get regulated. You're probably not going to get regulated at this point in time. And you might be able to get a bank account, but it's very difficult. But in the coming year and the coming years, you will start to see, as the market value increases, as the market cap grows, and as the penetration into all sorts of industries grows, the FCA, all of the big banks, they're not going to be able to ignore this. They're not going to be able to say, well, we just don't want to touch it right now. We'll leave that alone. Come back to us never. They won't be able to say that. So it's going to be a very similar progression to crowdfunding. The only difference is that instead of one industry, Bitcoin has the potential to disrupt nearly every industry in the financial markets. Industries outside finance can be disrupted by Bitcoin. There are a lot of other things that are not finance and are not money that can be done with Bitcoin. So we're going to see a lot more innovation than different platforms. But yeah, in terms of advice for Bitcoin exchanges, comply with MLR 2007, CTA 2008. You need to have really good practices for dealing with Bitcoin. I recommend key splitting, some sort at least. Cold storage, I recommend 95 or even 100% of funds should be kept in cold storage. Systems need to have no single point of failure. So if one server or if AWS goes down, if you're building an exchange or any company dealing with Bitcoin, you need to have lots of backup systems ready to go. I would also say you should never put Bitcoins on a server if you're dealing with an exchange. But a lot of Bitcoin companies have to have some small percentage in what's called a hot wallet or a wallet on a server. But because Bitcoins are such a hard asset, it makes them a very high target of theft. If I go back to the early stage startups, 20,000 coins. It's a lot of money. And they're gone. Banking infrastructure with client. Yeah, so you have to get your banking accounts settled. You should not go into a branch and just open an account because after 30 days, they will shut you down. You need your bank to know everything about what you're doing. And if they don't, then be prepared for a very short lifespan. Ongoing investigation into operations. This is the next generation of Bitcoin startups. If you're going to do a Bitcoin startup that deals with fiat as well, it needs to be as professional as you can be. So KYC verification, don't do it manually. The banks want you to do it with a professional firm. Electronic and manual verification. No longer are just getting two documents good enough. You have to have electronic and database verification as well. Risk profiling, enhanced due diligence. This is just necessary for any sort of Bitcoin company that deals with fiat and Bitcoin. But if you're accepting Bitcoin, I wouldn't worry about a lot of this. If you're just accepting it for computers or accepting it for like payment of various goods and services, you don't need to worry about this as much. And if you're selling Bitcoin, I would talk to Reg A or talk to a lawyer about what to do if you're selling Bitcoin. Or talk to us, but we won't give you as good advice as a lawyer. Yeah, trading systems need to be extremely professional. You can't have systems that one thing is going to fail and then the whole trading system is going to go down. If you're building an exchange, a DDoS has to be impossible. And IT team has to be full-time. If anything happens, everyone needs to be able to fix it. And maybe don't do the IT yourself. Don't do the software yourself either. Yeah, well, the only correction I would say on this page is that we're not dealing with dollars. And on that note, I would recommend any Bitcoin company to probably not deal with US dollars or American customers. Just don't allow me to use your exchange if you are building one, because I am from the US. So we're dealing with pounds, but other than that, this is basically what an account would look like with Coinfloor, and we look forward to getting you guys all signed up. My partner is Amadeo. He was going to be here today, but he is not. That's my number. That's my email address. If you have any questions, I'd like to open it up for that now.
Mark, thank you very much.
I can do it.
Questions for Mark? Here we go.
Hello. You've probably heard about an exchange that's launched in the UK quite recently called In Bitcoins We Trust. Now, in my opinion, they seem like cowboys because they say they don't need to be regulated in any way, that they keep getting told that basically just go ahead. What's your take on that?
Are they regulated, but are they registered with the HMRC?
I don't know. They seem to say that nothing applies. That's
Okay,
why I'm a bit
if they're
concerned.
saying that they don't need to be regulated by the FCA, well, to a large extent, that's our stance as well. If they're saying that they don't need to be registered with anything, then I should probably talk to them, and hopefully soon, because that's a disastrous position to take. In Bitcoins We Trust, I've heard about them. I haven't used their platform yet, but yeah, that's all I know.
Any other questions? One over.
Hiya. Do you actually have a bank account, and is that what's stopping you from opening at the moment?
We do have a bank account.
Yep.
I won't say which one. I won't say which jurisdiction, but we have everything that we currently need to launch, and we're looking forward to launch.
Okay, but no date yet.
A date will be coming soon,
Okay.
so keep your ears to the news.
Anyone else? Another question?
In terms of you need all these, you need to comply with all these laws if you're trading in both Bitcoin and fiat. How does that apply if you're not acting as an exchange, but you're still allowing some of the features so people can deposit in Bitcoins and then indirectly, potentially at a later date, take money out in cash? Does that have the same implications, or?
So if you are a brokerage service, which basically acts as a way to sell people and allow people to buy Bitcoins, but doesn't do the trading yourself. So we're a trading floor. We have the whole order book style trading floor and everything. But if you are just buying Bitcoins on exchange or buying Bitcoins from your friends and then selling to people on your site, basically a shop, that is for the most part very unregulated, at least in terms of the FCA. You may still need to register with the HMRC, and you probably still need to do KYC. It might not need to be enhanced due diligence, but customer due diligence still needs to be applied, most likely. But yes, that's perfectly possible. So,
What do you see the biggest risks with that, though, following that approach?
Losing your Bitcoin is a huge risk, and if you don't take that seriously, then a lot of people could be very angry with you. Other big risks are losing your bank account. Yeah, the two biggest risks are either losing your Bitcoins or losing your bank account. And so I would say for any company in this space, if those risks are going to be high, as in if you're not doing full cold storage, so full cold storage basically gets rid of the risk that you're losing your bank account. If you need to know more about that term, I can talk to you later. And then having good relationship with your bank, for the most part, gets rid of that risk. But that's a very hard risk to combat. So I would say that's probably the biggest risk. And those two risks are basically what most exchanges should be spending most or even all of their time working on. So.
Thank you.
So Bitcoin.de in Germany partnered up with Fido Bank.
Yes.
And they're allowing Bitcoins to be transferred between Euro and Bitcoin. Are you looking at any partnerships or integration with any existing structures or institutions?
We're not really looking at that bank specifically. I'll not comment on that. So, yeah, I think that's the best way to go.
Sure.
Hi there.
Hi.
I just wondered to what extent you've kind of reviewed the type of clients you expect to use the exchange. Like just looking at your expected flow, what sort of proportion do you think might be individuals versus merchants versus more institutional players? And if there's any other groupings of types of clients using the exchange that you'd expect?
I will not comment on that one as well. But yeah, we're looking at all of those. So yeah.
Do you offer any kind of guarantees for pounds deposited on your exchange or Bitcoins for that matter? What happens if you lose them? Is there a legal side to it, and is there also a customer service side to it?
all pounds will be held in regulated institutions. So I think the guarantees are not as much provided by us as much provided by our banking partners. And in regards to the Bitcoin, we will be publishing a good chunk, if not all, of our strategy for holding Bitcoins. And it'd be hard to find an insurance company that could insure our Bitcoins, but if that were an option, we would probably take it. But yeah, we will be disclosing everything. So.
Okay, Mark, thank you very much.
Thank you.